All right, hey guys, hey Josh here with Static Insurance. Today is March 14th, and it's a Saturday, so the market is not volatile, not being roiled right now. But I want to talk about Securian Financial. I want to talk about Index Universal Life. I want to talk about how this can help you, for example. But here's the setup. Now this is on me. Josh right here, male 43, standard, non-tobacco. Josh Stanek, male 43, standard, non-tobacco. Initial death benefit $100,000. Initial annual premium $3,600. Now there's going to be a ton of numbers here, but the reason why I like this illustration from Securian company, it's an Index Universal Life. Again, it can complement your it kind of mirrors a Roth IRA, after-tax contribution, gross tax-free, and then you can take out the money tax-free. So you got your 401k going, you got your Roth IRA going, and then taking a look at the Index Universal Life. But let's take a look at this policy. Like I said, the reason I like this is there's no cap. A lot of times when you talk about Index Universal Life policies, there's caps, meaning they cap your upside and so forth. But if we look at this, so 43-year-old male, $3,600, net outlay $3,600, and then the crediting strategy. Let's go down here and I'll show you the setup on this, and then we'll get back into the numbers. I'm not going to get crazy on these numbers, but what it is, how we set it up: a balanced index account, S&P Prism, 1 year uncapped. That's huge. 1 year uncapped, 50% allocation. We're illustrating at 6.33%, and a balanced index account, 3 year uncapped. Again, if you look at this, if you're looking at your IUL policies, you're going to start to see most of these have capped gains. Boy, when you cap yourself, you limit yourself up to the upward side of this. So 6.33 and 6.38. That's the premise of this illustration that we're going to be talking about. And then we're also going to get to give you the construct of this. But again, Josh Stanek, male, age 43, standard, non-tobacco, initial base death benefit $100,000, increasing death benefit $3,600, initial annual premium outlay, minimum initial premium $114.48. This contract is not a MEC, so what we're trying to do is we're not trying to maximize the death benefit here. We're going for the cash value accumulation of this policy. So this is, obviously it has a death benefit, but we're going for, this is a need for protection, but also a need for retirement income. And I'm going to show you here with the numbers how this works. Again, repeat this: 50% in the balanced index account, 1 year uncapped, then also 3 year uncapped. Again, this is through Securian Financial. And this is the benefit working with an independent agent, having the ability, the access, the resources, the knowledge to know what product has this ability. But the optional agreement here: accelerated death benefit for terminal illness, which is huge. Again, you don't even have to die to get the benefit on this. If you're terminally ill and you meet their guidelines, you could take the benefit of this policy. And there's also a chronic illness access agreement that allow you to access your benefits as well, even if you don't die. And then there's an overloan protection agreement, which means this policy will never default. So let's go back into the numbers up here. So for example, now that we know the construct of how this policy was laid out, age 43, $3,600, age 44, age 45, age 46, 47, 48, 49, 50, 51, 52, all the way up to age 65, and then there's a stop. Then I stop making payments here. Again, this is hypothetical. But then at age 66, I want to start taking my money out. Again, this is an Index Universal Life, which means that this is going to be an after-tax funding of my dollars. But then when I want to take the money out, I can take out, under this scenario, okay, $10,775 at age 66, and I can do that all the way, and I did it for 10 years, 10,775, 66, and I took out it at 67, took that number out at 68, took that number out at 69, I took that number out at 70, 71, 72, 73, 74, 75, 76. And you can see right here, when I'm taking those numbers out, my cash value right over here is still $299,000. And then I have a death benefit of $238,000. So I started with $100,000, so you can see the power of this. But as you see, if you run these numbers out even further, at age 78, 79, 80, 81, 82, 83, 84, 87, 89, 100, you can see what's going on right here. This thing will never blow up. If we go up here and we look at this, death benefit $454,000, cash value $354,000. So there's a lot of different ways that you can utilize this to be part of your plan, your retirement plan. That can complement, again, your 401k, complement your Roth IRA plan, and it's an added layer where it gives you protection, but also gives you the cash value accumulation. Again, this policy wasn't designed, and again, it's under the fiduciary responsibility of the planner, the advisor, the insurance agent, to devise a policy that can be maximized for cash value accumulation, if that's what you're looking for. And that's what I do. Standing Insurance right here in Bucyrus, Ohio. And there's the features here too, the terminal illness and the chronic illness as well. So there's many moving parts. The flexibility of an IUL cannot be understated. So for more information, I'll put more notes in the under the bio here under YouTube, but you can check me out online. But for more questions, if you want to set up an initial consultation through phone, obviously I know we got the coronavirus going on. If you want to set it up on the phone, we can take care of that. Or you can follow me on Facebook. I'm active on Facebook and Twitter, as well as LinkedIn. All right, keep it locked, loaded. Standing Insurance.